All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. And why don't we jump right in and see what's happening on Market Day Report. Let's take a look at these corn prices. Well, not too bad, actually. 6 1/4 cents lower in the July contract at 7.67. We've had a decent range today. We're only about, say, 9 cents off the lows there, so it's okay. We have been worse, is what I would say. Deese is only off. That's the new crop, 1 1/4 cents to 7.19 1/4. So that's not that bad. All right, let's move right along. The soybeans are where we start to lose a lot of real estate. Got 30-cent losses basically across the board. 32 1/4 cent loss in that July contract. 17.13 1/4 is last. And go down to Novi, new crop, boom, 35.5 cents lower to 15.32 3/4. However, we have been a further 16 cents lower than this earlier today. So with that huge range, we've got, say, 60 cents almost, 58 cents it looks like. That's a lot of beans. So big ranges. We're off 35 3/4 cents. Something to keep an eye on because that's big. Wheat. How about wheat in Chicago? How about this? It was higher during the radio show earlier this morning. We've got that July contract just off 2 ticks, off a half cent to 10.70 1/4. We've got September unchanged at 10.84 3/4. But as you go out the deferreds, we squeeze out a penny gain basically. I think Deese is up a penny to 10.99. Trying to put an 11 in front of it on a day like today. Wow. So that's a good wheat board in Chicago. How about the hard red wheat in Kansas City? Well, that's also higher here. We've got the July up a half cent to 11.63. SEP is unchanged, 11.69 1/4. But look, even Deese is up a quarter. Wow, 11.77 1/2. That board has found its feet since I've been sitting here. Spring wheat in Minneapolis. What's been happening over there? Got a 2 to 3 cent gain across the board. So July is up 2 1/4 to 12.23 3/4. You go out the deferreds to even Deese, 3 3/4 cents higher, 12.23 as well, 12.23 1/4 out in that Deese. So pretty good going for the spring wheat as well. Lastly, let's see if we got any better news. We were slightly lower in cotton. We still are. 47 points lower in that July contract, 144 spot 59. Well, we're 49 points lower in the Deese to 121.91. That's a pretty quiet one we got going on. All right, how about bringing in Todd Horowitz, our next guest analyst from Bubba Trading. Todd, thanks for joining the show all the way from Chicago. What are your thoughts?
Well, Scott, I think this is like a wholesale, sell everything, ask questions later type of day. Volumes remain really questionable here. I'm concerned at the lack of activity in overall markets, which can, as you know, can lead to bigger moves in either direction because of the lack of participation. And I think that's, I think we're still going a lot higher. None of that has changed. The things you and I talk about every week have not changed. However, when you get into a market that the equities are getting hammered, and they've been basically getting hammered for a couple of days now, to me it just looks like they're selling everything and they're going to ask questions tomorrow.
Right, and when it's about demand, and I think that's what the Fed's doing. They're destroying demand. It's the wealth factor. They're going to be taking dollars out of your pocket because they're going to go up in smoke because of what's been happening. Say the $8 to $10 trillion you've lost in the last 3 to 4 months when it comes to the equity market. So by doing that, people are going to be poor. They're going to have less capital. They're not going to be able to buy as much. And I think that's why we've got so many things going off because what does a gallon of gas cost if nobody's got any money, right? So that's kind of
it doesn't matter, right? I mean, you can't eat, you can't drive, you can't do anything, and this is the destruction. And of course, we've got another meeting on Wednesday, which could may cause more destruction.
Right. I mean, and it could be anywhere between a 0.5% rise and a 1% rise. The streets, I think, still going for a half, but there is a lot of rumblings about just getting it over with, doing 3/4 to 1. But I'm not quite sure. Those folks that are saying that are not taking into consideration that all the other higher prices when it comes to food, fuel, everything else you buy at the store, that's a synthetic tightening as well, right, Todd?
Oh, inflation is certainly a synthetic tightening. I mean, listen, you've lessened demand because people can't afford it anymore. Our wages are nowhere near keeping up with what the cost of inflation is, and that's going to slow down everything. And this is, again, it's a backwards way of what they're trying to do it, and it should be done with bringing more fuel to the markets, but they don't want to do that. So we'll sit here and have to suffer through probably a long, extended period of ugliness here. But I think the grain markets will find some footing and start to move again because, again, you got to eat, and those are consumable goods. They're not hard assets.
Right, and Mother Nature's going to start playing her games too. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk livestock with Todd Horowitz with Bubba Trading after these messages. All right, welcome back to Market Day Report. I am Scott Sheldy. I am the cow guy, and I often use this little segue into the live cattle market. Cow guy, live cattle. We'll see if it works. All right, let's take a look at live cattle in Chicago. Well, we've got that August market off $2.65 to $133.55, 133.55. That's closer to the low than the high, but it's well within the day's range here. These markets are just worried about that demand destruction, right? The consumer's got no money. What can they afford? We've got December live cattle in Chicago off $2.12 to $145.62. I think this is a baby in the bathwater situation when you start to see this happening, especially after these markets have had some decent days. Look at August feeders in Chicago, $3.82 lower to 170.65. That's still $1.20 off the lows, and it's in the well within the day's range. Again, this is another demand destruction, throw everything out the window kind of a deal. We've got October even off 277 as you go out the deferreds. So giving back some of the real estate that they've acquired over the last few weeks. And then finally, let's take a look at lean hogs, and we'll get our guest analyst in for the last minute. All right, so lean hogs, July's up 17 cents to 105.65, and August is off 35 to 103.40. All right, Todd, we got 45 seconds. What do you think about the livestock here?
I think that cattle's in trouble because look at what happened in crude today. It was down about $3. Now it's up on the day. I think hogs should be fine, but overall, I think we're going to see a lesser demand at the moment in the cattle markets because, of course, the prices are going to drive people out, and the lack of income and the lack of a real expendable income is going to change how we spend our money, which is a shame, but that's the way it's going.
Right. I mean, to put it simply, the consumer's got no more money, it says the Michigan Consumer Sentiment Survey, because everything's higher in price. The retailers, the only way out of making any money out of this is raise prices on that stuff while the Fed continues to make interest rates go up. So that doesn't really spell anything good for me, if you know what I mean. I really appreciate you coming on, Todd. Thank you very much.
Thanks, Scott.
Todd Horowitz from Bubba Trading coming to us from Chicago. I'm going to bring back Nashville, where it's nice and steamy, and throw this one over to Janet.